in the way that people think it does. The chairman of the Federal Reserve hiking interest rates 25 basis points. This is what Chair Powell had to say.
We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think, we're going to be looking carefully at the incoming data between now and the March meeting. The job is not fully done.
Except some people think it is. Equities up by 1%, Tom, on the S&P and the NASDAQ. We're up by 2 percentage points.
We are. We're going to have to see how it goes. And the market's still moving, still digesting this press conference. Again, the NASDAQ went under 2.2%. We need wisdom, and we get it from someone who's helped us so much over this pandemic. Jeffrey Rosenberg joins us. He's Senior Portfolio Manager at BlackRock. Jeff, I got 8 ways to go here, but the bet that we saw just played by the markets in the press conference and, frankly, after the press conference is enormous. Is it a reset by the markets?
Well, I'm listening to the discussion, and I think you're spot on here. Lisa, I think you're spot on in the comments that you highlighted. I think everybody's picked up on it. It is the reflection. It's the answer to the question around financial conditions that the market's really seized on. So there's a real disconnect between, what he said, what the statement said, maybe what he wanted to say and what the markets heard. But what the markets heard was this issue of the conflict between financial conditions easing and whether or not that would impact the Fed's policymaking. He dismissed it. Lisa, your second question, answer, it absolutely matters. It matters because it was the second thing that he said was it's important that financial conditions reflect the tightening. And so if they don't and it goes too far, it absolutely feeds back into this is how modern monetary policy transmits into the real economy. And so it will push against the attainment of their goals, and that will eventually show up. But for today, the market reaction is really off of that statement.
And Lisa, the Bloomberg television banner, I didn't write this one. This is a brilliant banner, and it really says all here. Powell acknowledges disinflation. That's a terrific summary for non-sophisticates about what they're watching here with titanic market moves.
Which is just a factual statement, right? Because we are seeing disinflation in the data, and yet the way that it was emphasized, the lack of emphasis on the balance of risks of not going far enough is what has the markets going. Jeff, to your point, if markets aren't listening to what Jay Powell wants, which is tighter financial conditions in order to get down to that 2% goal sooner, does this basically force the Fed's hand to go further than might be feasible for this economy?
Well, it goes back to that very difficult concept of long and variable lags, that right now, they don't necessarily need to do that because right now, the disinflation commentary, the trajectory on inflation, the good news that he highlighted from the ECI and the wage picture, all makes it look like, hey, everything's going according to plan here. But if along the way that easing in financial conditions undermines that when you settle back down in terms of take out the disinflationary goods piece, I thought he did a nice job kind of, answering the question of, I think it was the question on, why haven't you already gotten success on inflation? It's because you can't annualize the disinflation of the goods portion of the economy. When all of that washes out, we may end up at a higher level. And if that's the case, it's because the wage picture, which he cautioned many times, we haven't seen success on that, but mostly the market is ignoring that. If that comes back to root at the same time as the easing in financial conditions, it's going to make the job harder. And Jonathan, what you said earlier about the disconnect between the Fed statement of staying high at the terminal rate, wherever that terminal rate sets up, is it 25 more, is it 50 more? It's really about the markets are pricing not only that, but a full pivot. And the easing in financial conditions may make that very hard to reconcile. But that may be a number of months and quarters away before we get to figuring that out.
Jeff, if I'm a market participant, though, I'm listening to what he said about financial conditions, and I'm just thinking, that was bizarre. Neil Dutta of Renmac just published, and Neil said this. Powell has said that financial conditions have tightened considerably despite the fact that they have eased considerably. The fact that he has said that is dovish in its own right. The odds are increasing that the Fed is declaring victory too soon. Jeff, what would you say back to that?
Yeah, I think that's exactly the interpretation there. That if he's saying we're concerned, what he said was we're concerned about the longer run financial conditions. We're not going to look at these short term measures. What he was doing is he was dismissing the thing that the market was most concerned about, that they would react to easing of financial conditions. And Neil's exactly right. It gave a green light for financial conditions in the near term to continue to ease. Go ahead and rally interest rates and risky assets. And so that was an opening. They may look back on that and need to walk that back.
Well, that's right where I was going.
2 months.
Jeff, you're reading the script. Come on, John Farrell, get out the calendar. Bramo's better at this than both of us. Exactly when do they start walking back this press conference?
In the next couple of days, we'll see. We've got payrolls coming up on Friday. I thought it was just really, really strange, Tom. Really strange. And I guess the simple question now, Jeff.
Strange is the right word, yes.
Is this bullish for risk assets?
Well, look, in the short run, that's the market interpretation, again, because it says, hey, risky assets, financial condition easing, Fed's not going to react to that. So it relieves some of that concern that if you go too far, then the Fed's got to do more. Powell just said not so worried about that. So in the near term, yes, right. but you got to take the longer term view here that this is going to make the attainment of the inflation objective that much harder. And so the uncertainty's there. He had one great line, which I think is great to remember here. Certainty is not appropriate. And I think that's the other takeaway as we work through this inflation uncertainty.
Truly original, and as Mr. Farrow said, as a philosopher, strange. The 2-year yield just breaks down to new lows, 4.096. With immense respect, Jeff, how do you manage multi-strategy in this milieu? How do you, as a pro, react to what we're witnessing this afternoon?
Well, it's a really good key word that you said, which is react, which is back to my comment a second ago. Certainty is not appropriate. Forecasting here is very tough. It's very tough. As Powell laid out, we haven't been through 5 episodes of global pandemics and know exactly how the story is going to play out. So it is really about reacting, not overreacting to this day's financial conditions easing. But it's also taking what the market is going to give you. And right now, with the curve inversion and the opportunity of the highest yields being in the lowest risk areas of the fixed income market, sometimes that's what you've got to take. And some of the other more uncertain parts, you just have to wait until some of that certainty and some of that uncertainty reveals itself. And that's critically this path that he talked about in terms of the labor markets and the wage picture.
Tom joked that we get the 2-year yield below 4% after Jay Powell spoke. We're getting closer to that 4.09%. I am wondering, Jeff, whether you'd lean against this, right? At what point would you lean against this pretty significant move that we're seeing across the yield curve if you do think this Fed has to walk this back?
Well, I think the broader issue in terms of leaning against is really not so much the short term, but what is the market narrative and what is the market pricing in? It's pricing in a very rapid return to 2% inflation with a lot of certainty. And I think that's the part that you can push back against in terms of if that inflationary trajectory turns out to be correct, that's already in the price. And if it's not, the surprise is to the upside, and the vulnerability, I think, is particularly to those longer maturity yields where they're reflecting not only the attainment of that 2% inflation in the lack of any kind of inflation term premium, but as well the pivot and the cut in interest rates, which would be exceptionally difficult to realize if that inflation trajectory doesn't show up the way the consensus forecast has it.
I'm sitting here and I'm about to do an impression, my best impression of trying to be diplomatic. But are we all saying he's that bad at his job, Jeff, that he's got to walk this back in the next couple of weeks? I mean,
oh, you're cruel.
I really don't understand it, Jeff. He would have had time to practice this last night and this morning. We all knew what questions would be asked. Are we seriously sitting here and saying he didn't mean what he said about financial conditions?
Well, I think it was one question. It was in the beginning. Everything else went to script, right? Everything else was cautionary, explaining the different components in terms of inflation, the lack of certainty around the wage piece, the importance of why we need to keep the pace going, slowing, but going because of their perception of what is the appropriate stance. So all of that was there. It was this one piece on financial conditions. Perhaps there's going to be a clarification. We've seen this before in other meetings where there were statements made where it wasn't clear where he was talking about short-term inflation when talking about real rates or long-term. They came back out to clarify that. So, perhaps they do. But most of what was here, and that was the market reaction at the beginning, this was sort of relatively hawkish, kind of delivered on expectations. Rates were a little bit higher. But yeah, the question on financial conditions certainly has triggered this round.
It's a long way of not answering it, Jeff. Thank you. Jeff Rosenberg.
Nailed it, Jeff.
Thank you, Jeff. Your equity market then up 1.2% on the NASDAQ. We're up by more than 2%. The rally in the bond market, let's look at a move. Yields are lower at the front end by 11 basis points on a 2-year term, 4.088% on a 2-year yield.
I don't want to talk much here because we got two great guests coming up. But John, top to bottom, the 2-year yield from above a 425 has moved 17 basis points. I can honestly say I've never observed that.
And Mike McKee, running out of that news conference, joins us right now. Mike, good afternoon. Your thoughts on that one?
Well, I called up a graph of the financial conditions index, and if you look at it 6 months, 3 months back, yes, they've eased. But go back a year, and Jay Powell's right. They are significantly tighter. And so the Fed seems to be saying we are seeing the impact of our cumulative effort of raising interest rates. We're not sure how much more we have to do. We're leaving the door open to do it if necessary, but for the first time we're starting to acknowledge that maybe we don't have to go as high as we said at the last meeting in December. And so it's kind of the Fed trying to have more optionality, I think, because they aren't sure of where they are. This the economy is sort of like Schrodinger's cat at this point, and they're trying to direct it. So where do they go from here? They keep an eye on all of these indicators, and as Powell said, we've got all these inflation, jobs, and growth indicators coming up before our next meeting that we can take a look at. The markets, however, want to trade today, and as Powell said, they have a different job than we do.
Mike, do you think that the Fed underestimates where financial markets are, that they're looking at something else when he talks about tightening in financial conditions amid some of the loosest financial conditions, according to at least the Bloomberg Financial Index conditions index, going back to February of 2022?
You can look at a lot of different indexes for financial conditions. They're looking at the overall tightening, I think, in the bond markets is what really matters to them. There's certainly liquidity in equity markets, but what that does is simply makes it easier for companies to spend and for people who have a lot of money to have more money. But the spending decisions are going to be based much more on the cost of borrowing money, and they have had some success there. They're coming down today, but what would happen if we got a 3.5% unemployment rate on Friday? The bond market might completely reverse itself. So the Fed can't be as reactive to every change in the way the markets go as the markets can be. And I think Powell wanted to make that point today.
Jim Michael McKee, thank you so much. And we'll
Thanks,
get
Mike.
further wisdom, I think, John, here in the coming days. We need to frame, John, who this guest is. This guy was way out front on a crucial distinction. Yeah, gloom, recession, but out there. Everyone else was in short. And Deutsche Bank said, no, we're out there.
I made the call in 23 for a recession, Tom, back early in 2022.
It's as big a call,
I remember the
frankly, as what we saw
conversation, when it happened.
In Israel. Let's go to Matthew Lazzetti right now with Deutsche Bank. Matthew, do you reaffirm a recession call after the bizarreness we're seeing today? I need a NASDAQ up 300 points to confirm the bizarreness. But do you reaffirm an NBER recession call out there?
Yeah, that is still our base case. We still have expectations that it begins around the middle of the year. But you are seeing some changes in risks around that, I think. We've seen some slowing in the data that's more material in the recent data points than we were anticipating in consumer spending, CapEx. Certainly the housing market has kind of been in dire straits. We got an ISM report this morning that shows very clear weakness. And so I do think that there's, conditional on a recession happening, there is some risk that it happens a little bit earlier than what we have built into the forecast. At the same time, I do agree with Chair Powell a bit that the price disinflation that we're seeing, wages coming down at the same time with financial conditions easing, if price inflation continues to come down as it has, it does open up a greater path to a soft landing. So still have a base case for a recession. Timing is unchanged, but there has been a shifting in risks around that.
The advantages of Peter Hooper and others we've been talking here in the last 20 minutes about the assumption they will adjust to this Fed press conference, which is massively market moving. I'll let John do the data check. I can't look at those big numbers like he can look at them. But the bottom line here, Matt Lazzetti, is simple.
What that means.
No, come on. Look, NASDAQ out 2.7%, up 320 points on the NASDAQ. This is a massive market move. Do you expect them to walk back this press conference, Matt?
Look, I think that there were three dovish things that the market was latching onto. You guys have certainly been talking about the FCI point. I think the other 2 points would be he did not reaffirm the December SCP, although he did indicate a couple more rate hikes as an expectation. And he also hinted at that there were clearly discussions about pausing. The way that I would read the Fed from now on is, they are clearly guiding towards another hike in March of 25 basis points. But they are highly data dependent at this point. If we get inflation accelerating a bit in the near term, which is our base case, and it sounds like it's the Fed's base case as well, I think they likely do deliver on that May rate hike as well, but it'll be highly dependent on what happens with the inflation data. In terms of whether they should push back on this or not, I do think they downweight equities in terms of thinking about financial conditions. When you look at broader based measures of financial conditions, what's happening with bank lending channels, what's happening with C&I lending conditions, there's been a much more substantial tightening there. So I do think you have had a broader tightening of financial conditions. All that said, do they want equities to be ripping right now and easing financial conditions substantially more than where they were? I would say, all else equal, that was probably not the expectation from the press conference.
Did he get that from Biggie Chada?
That's a technical
I think
phrase.
he did. That was like
ripping.
Biggie.
I actually wish someone in the news conference had said the Nasdaq is up 2.6%. What do you think, Matt? I think for a lot of people in this market, they're done with the inflation story. We've seen the peak of that. They're done with the Fed hiking cycle. They believe the terminal rate is just around the corner. The big debate now is, what do we come down to? Where do we settle down on CPI? Is it 4%? Can we get that nice clean trajectory back to 2 without doing too much damage? And how long is the Fed going to stay at peak? And Matt, I just wonder, is there a date on a calendar where you think that difference, that spread between this market and this Federal Reserve starts to get resolved in one way or the other?
Yeah, I think there's two elements to this. There's the terminal rate pricing, the gap that's there, and can that possibly close? And then there's the rate cut part to it. I do think if we get stronger inflation prints over the next few months, which is our baseline expectation, as I mentioned, I think it's the Fed's as well, that you will likely see the market price greater probability of a hike into May. And so that will help to, I think, narrow the gap between the Fed and the market on terminal rate pricing. There's the other side of this, which is then the rate cut part. And I think that'll just take evidence on, are we getting a recession or not? Are we seeing inflation come down in a way in which the unemployment rate is not moving higher? But really, I think, wrote a piece last week, under most of the conditions that we expect, that the consensus expects, or even the Fed expects, they likely should begin to cut rates this year. And that's because they are coming from such a restrictive stance for monetary policy that even as inflation comes down, they can keep real rates positive while still cutting the nominal Fed funds rate. And so I do see a high probability of them cutting rates by the end of the year. We have a 50 basis point cut in December as our baseline expectation.
So Matt, how high is the hurdle for that? Can you just put some more numbers on that particular call?
Yeah, I think, if you do not see progress in the labor market loosening, and if you were to get an inflation forecast that is close to the Fed's, so by that I mean, core PCE at the end of this year at 3.5%, the unemployment rate at or below 4%, in that world, the Fed would most likely not be cutting rates. But we think inflation is going to fall a bit faster than the Fed. We think that the labor market is going to loosen a lot more aggressively than where it is today. And I think if you're anywhere, call it 4.5% to 5% on the unemployment rate, and that inflation core PC has fallen into the 3% range, you're likely to begin to at least see a modest adjustment in monetary policy lower by the end of the year.
When does the loosening in financial conditions that we see today with the 2.6% gain on the NASDAQ, when does that loosening start to push us further away from the Fed's goal, further away from a soft landing?
Yeah, I think I would certainly agree with Chair Powell today that you don't want to overemphasize any short-term movements. You especially don't want to overemphasize movements around a key event risk, as what we've had with today's FOMC. So we'll have to see what happens with the market over the next few days. We have key data points, key earnings reports, but you have seen these high-frequency estimates of FCIs clearly easing. And if that's occurring in a world where we have some acceleration in inflation data over the coming months, then I think the Fed would likely have to push back on that. It could very well come simply by pricing in what the Fed already expects for the terminal rate above 5%.
Do you think that the Fed did a good job today?
I think Chair Powell was quite honest. I think they want to be backing away from forward guidance at this point in time. There is a lot of uncertainty. There's questions about risk management. We are coming to a world where there's much more two-sided risks, as we're seeing recession risks at the same time where inflation is moderating. It's a difficult one always, I think, to produce a neutral outcome for the market. The market will kind of anticipate and see and latch onto what it wants to latch onto. I guess I would counter with there were a few hawkish points in the press conference. He noted a couple more rate hikes, which I would kind of read as reaffirming the May FOMC, the December FOMC meeting. He said that they need substantially more evidence on the inflation front. All that, in my read, actually suggests that the baseline remains that they hike through May, putting aside what the market has latched on to from these other data points.
Hey, Matt, wonderful to catch up with you, sir. As always, Matt Lazzetti there of Deutsche Bank, following the latest move from the Federal Reserve. I want to pick up on that phrase. It's an important one, Tom. More two-sided risk. The risks are much more two-sided than they were just several months ago. And I think that maybe if you sense some hesitation in that news conference, it's a reflection of that.
That's really, really a good point. And what's important here is the two-sided risk is not symmetrical. The history of central banking, going not back to biblical, but easily back to the 19th century, is it's always in every case asymmetric. And they're battling that reality of asymmetry within the uncertainty that he mentioned there. It's an uncertainty that all of us are living day to day.
Probably fortunate that they don't have to put out any projections today, any forecasts, because I think it's tremendously difficult to forecast this economy 1 year out, given what's happening with China. And China wasn't a big feature of that news conference. And I imagine in a couple of months' time, I think just sitting here guessing, I can imagine a news conference that's got way, way more questions about China than it does right now.
He flicked at it, though. When he started talking about whether his statement of economic projections was changing, he talked about how international affairs were affecting some of the potential projections. So flicking at this idea that perhaps the reopening of China could help the situation. Pair that, though, with the fact that now we're pricing in, evidently the Fed swaps, pricing in 50 basis points of rate cuts by year end. I mean, that's both a gloomy picture and an optimistic picture. I can't figure out which. My head's kind of just in a knot.
I know that beating up on a Fed is a sport, and a lot of people enjoy playing that sport. But if you were to sit here and say, is that the outcome the Fed chair wanted from this particular meeting, Tom, I think it's fair to say it probably isn't.
Yes, I agree. In a way, it was almost like he was in the metaverse. I mean, we don't have the metaverse within monetary policy, but I'm looking at a market reaction that screams metaverse.
Well, here's the thing, and to be fair to Jay Powell, he's trying to speak the truth, and the truth is nuanced, to a market that doesn't want nuance and doesn't want that wants a hard statement. This is what we're going to do. This is where we lean. And he's saying, okay, we've got this, we've got that. And that nuance isn't playing well in a market that is looking for something definitive.
I just want him to reflect the consensus on the committee. And when he's asked straight questions like, did you discuss a pause? Just answer the question. Did you discuss a pause? And what are you really worried about if you say I discussed the pause?
The NASDAQ going up 4%.
So what? You've told us you're not really bothered about financial conditions. Why does that matter? They're the kind of weird, hesitant moments that I think the market latches onto, and investors just sit here and say, okay, let's buy, let's go. They're done here. They're hesitating. Let's move on. And when we talk about moving on, we know what we're moving on to, right? We're moving on to conversation about the economic data, the incoming information. And at this point, I don't think anything else matters, right?
And which economic data, they are talking about jobs, but they're also talking about, Tom, as you mentioned, disinflation. And that says a lot. The fact that they're as focused and emphasizing that as much as the jobs in the fully employed America.
It's disinflation within the metaverse. Speaking of meta.
We'll get some earnings a little bit later. Romain's going to be on top of that. Hey, Romain.
Hey, John. Yeah, we talk about a market that to a certain extent has moved on. Of course, after a year-long rate hiking cycle, a lot of them, of course, making the bets that this may finally be the end. You see the numbers on the board behind me. Those are the macro conditions, and that's the macro read for the market. But now it's shift back to the micro as earnings season really starts to heat up. And so far, what we've gotten, well, it's been a little bit of a mixed bag here. Meta Platforms coming after the bell tonight. This is, of course, an advertising story. We had Snap yesterday. It was not good. And we're expected to hear from Meta, guys, what's going to be their first annual drop in revenue as a public company.
Really looking forward to the coverage. It kicks off in a few minutes' time. TK, that does it for us.
Absolutely historic.
I'll see you tomorrow morning.
I'm just stunned.
I think we're here again in a few hours.
Yeah, exactly.
It's like 12 hours away.
Exactly.
Looking forward
I'm
to it.
sleeping under the desk.
I was just going to say, my bed is rolled out.
What a crazy, crazy time. What a crazy time. We'll pick up the pieces tomorrow morning. Looking forward to that coverage with you from New York City for our audience worldwide. This was The Fed Decides. This is Bloomberg. Good afternoon.
It is 3:45 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. We've got a Fed Wednesday rally underway. 14 minutes to go ahead of the closing bell. 14 minutes to go until we hear from Meta Platforms. That stock, by the way, up right now by 2.9%. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. It is time to take advantage of the newly extended employee retention credit. The Innovation Refunds has helped small and medium-sized businesses impacted by COVID-19 claim over $3 billion in refunds, and they're standing by to help your business get back the money it may be eligible to receive. Learn more at getrefunds.com. Right to the numbers. 10-year yield now 3.39% with the 2-year 4.08%. Stocks higher as Fed Chair Jay Powell said the central bank has made progress in its battle against inflation while warning that additional rate increases are likely warranted. You heard the news conference live right here on Bloomberg Radio.
At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet.
Central banks said ongoing rate increases will likely be warranted and that officials are discussing a couple more hikes to get policy restrictive enough to beat back inflation. So again, stocks are rallying right now with the S&P up 58, up 1.4%, the Dow up 120, up by 0.3%, but NASDAQ, the outperformer, up 2.4% now, up 279 points. 10-year yield 3.39% with the 2-year 4.08%, spot gold up 1.2%, 19.51 the ounce. West Texas Intermediate crude down now. WTI dropping 2.4%, 76.99 a barrel. Again, Meta Platforms coming up after the close of trading, up now by 3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
Start funky music will drive us till the dawn.
on Bloomberg Radio.
All right, I've kidded many times. Everything is awesome. You look at the market reaction because we have a rally underway, as you just heard from Charlie. Welcome, everybody. Of course, this is Bloomberg Business Week on this Fed Wednesday, first Fed meeting of 2023. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Broker studio, streaming on YouTube and Bloomberg Quick Take, and yields backing off. I mean, markets, investors, traders saying, we think the Fed's just about done.
Yeah, the big question is, does Fed Chair Jay Powell think this is awesome, what he's seeing in markets right now?
Well, it was interesting, and I thought, Jeff Rosenberg of BlackRock making a comment and stressing in reaction with our TV colleagues as the Fed made its decision and we went through the presser, certainty is not appropriate. Certainty is not appropriate. That's what Jay Powell said. So, there is no exact science in all of this. And Jay Powell, yes, saying we're making progress on inflation, but also saying, hey, folks, we've got some more moves ahead of us.
Here's some other things that stuck out to me, Carol.
Yeah.
Further rate hikes will be appropriate it's premature to declare victory. We have a lot of work to do. And if our outlook turns true, then I don't see us cutting rates this year.
I think that's really key, and yet the market's saying differently.
Did they just ignore all that?
I don't know, but the traders have been thinking differently despite the dot plot that we got in the last update of projections, which shows the Fed continuing to raise rates further along and above 5%. Traders have been saying differently. I do think it was interesting that Jay Powell said the Fed is strongly committed to bringing inflation to that 2% goal. He's not backing off of it. He thinks it's doable.
And yet, we continue to get data that point in the other direction. I point no further than the JOLTS data that we got earlier today. 1.9 jobs available for every unemployed person here in the United States.
Well,
it's going in the wrong direction.
And he highlighted that as, we're still continuing to see some strength, significant strength, if you will, in terms of the labor market, and talking about, reducing inflation likely to require below-trend growth, and also talking about, the Fed having to stay the course, but also talking about, the base case is return to 2% inflation without a big jobless jump. That's the fingers crossed. Hope
that's the soft landing?
That's the soft landing.
Can he stick it?
We shall see. We talk about living in different times, and maybe that will be it. All right, so let's get to the markets, because it's been an interesting day, no doubt about it. A lot of risk on trade here, and we've got a good guest who has to make some investment decisions and put money to work in specific names and entities.
Sandy Villery is portfolio manager at Villery & Co. They got $1.5 billion in assets under management. They're based in New Orleans. On the phone from there this afternoon. The Villery Equity Fund, we should note, well, this was, as of this morning, up 10% so far this year. It's beating the S&P 500, putting it in 80th percentile when it comes to other funds in the category. Top holdings include Freeport McMoRan, Visa, JB Hunt, and more, Carol.
All right, so let's get to it. He is based in New Orleans, and we find him there on this Fed Wednesday. So, Sandy, good to have you here with us. We do like to talk names and stocks with you, but let's talk macro first of all. Fed decision, a bit of surprise, or the market reaction, a bit of a surprise? How do you see it?
Yeah, and Carol, thanks for having me.
Sure.
When we looked at Powell today, and when he definitely sounded hawkish. He started saying that rate increases would be ongoing. He gave little indication there at the end of the rate hike cycle. But when I look at some of the dovish language, which y'all were referring to earlier, he said they are acknowledging that inflation's easing, and they are making progress. So, he's in a tough spot because he knows historically the Fed tends to overdo it. They raise too much, and he's just trying to keep us out of a deeper recession, but he really doesn't want to pivot too soon, and then inflation just heats right back up again, like it did in the 70s, and then we're in all sorts of trouble. So it's the cross currents why you, I guess, saw the market, down sharply this morning and then rallying hard. People are trying to figure out, which direction, and I think the bond market is smarter than the stock market, and it is telling you with the 10-year, falling, the yield falling. I think it's telling you that even though he's saying he won't cut by the end of the year, that you possibly could see a cut, maybe as in November or December.
While we know they're always data dependent, and nothing is certain. Jay Powell did say the Fed is not exploring pausing then restarting rate hikes. I think that's a big one, Tim. Because it's that idea of, okay, we're not going to pause and then thinking we're going to have to raise again. So I don't know whether he's just saying, hey folks, we're going to get it all out now, so we're going to continue, or he's just so certain that inflation will continue to trend lower.
Why did the markets, though, Sandy, latch on to the dovish language rather than the hawkish language? Because there was certainly some dovish language in there, but the hawkish language was there as well, and they're choosing to focus on the dovish language.
It's incredible, but I think maybe they're focused on simply the bond market. And when you see those yields fall, it's telling you we're either going to some sort of shallow recession or rates are going lower. And so I think they're looking at the way that's acting, and then I think that's carrying forward into the stock market. It was interesting. We got that JOLT survey this morning, and you look at November, we had 10.44 million job openings, and now we've got a little bit over 11 million job openings. And as you said earlier, 1.9 jobs available for every person looking. So I think he's got to be a little bit cautious that you could get some wage inflation. But at the end of the day, the market went with the bond market and started to rally as yields fell on the 10-year.
How do you feel about valuations right now?
I think it's a tale of two different markets. If you look at 2022, you saw growth stocks off over 30% as interest rates went up, and growth stocks tend to move inversely, and you saw value only down about 2%. So clearly last year people hid in the large cap dividend value stocks, the Johnson & Johnsons, et cetera, and it just left growth sort of for dead, which is what we really do as an active stock picker. We tend to try to, find these high quality growth companies that are trading at really reasonable prices. And I think there's plenty of great valuations in individual stocks. And so, we like growth. We were, adding to some of it in some of the lows last year, and it's picked up, sharply this year. We've seen growth already up, 12% year to date, and value's only up a little bit over 2%. So there's been the great rotation, but I would be fishing in the growth pond rather than the value pond.
Give us some of those growth stocks that you'd be fishing for in that growth pond.
Yeah, so one of the ones we like is ON Semiconductor, a great play on the 5G build-out. They've also got a lot of demand from electric vehicles, things like alternative energy, industrial automation. We tend to follow great CEOs. And Hassan El-Khoury, he used to run a company called Cypress Semiconductor that we were a large shareholder in, and he's come over to ON Semi some years ago. He's already transforming it from, a higher growth, higher margin business from, something that was more commodity oriented. He's getting, he wanted to have gross margins near 45%, basically 2 years from now. He's already there, and he's moving to 48 to 50% because they're growing an area called silicon carbide, which is just growing extremely quickly. This is for things like electric vehicle batteries, and Goldman will tell you 13 million electric vehicle batteries will use silicon carbide by 2030, and that's only at 1 million today. So he's just a great manager. It's a great business, and I think this is why you're seeing things like ON do quite well when you have competitors maybe like an Intel that can't get out of their own way.
So even though it's up something like 19% so far, 25%, because we've seen certainly an uptick, if you will, in today's trade, kind of pushing everything higher. I mean, alone today, it's up another 6% here. Valuation feels about right here based on the outlook?
Yeah, I mean, I still see these guys making over $4.50 in earnings, basically this year. So you're looking at a stock that's under 16 times earnings, which is, in my opinion, I'd say it's fair value or undervalued, given the transformation of a more profitable business, higher margins, and just growing much more quickly as they get into the non-commodity side of their business.
All right, going to leave it on that note. Listen, Sandy, thank you so much. Appreciate it. Sandy Villery, portfolio manager at Villery & Company, joining us on the phone from New Orleans. And we just have a few minutes left in today's trading session. And as we, continue to bring it down here, we're just rolling over in terms of our best levels of the session. So a little bit lower on the Dow, down about 41 points. S&P, though, a gain of 38. NASDAQ up 223. Very different from the trade that we saw prior to the Fed decisions. And rates, we know, have come down as well.
At the risk of pushing things forward too much, the big question is what happens tomorrow after people continue to have time to digest, because oftentimes we see big moves the day after a Fed meeting.
Yeah, it's amazing, though, that we saw buying yesterday and it continued in today's session. Risk on trade, that's where investors want to be. Beyond the Bell starts now.
Always wonderful to catch up with you. Seth Carpenter, Chief Global Economist at Morgan Stanley. Stick with us, a lot more coverage here as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, 2 hours from, of course, the big rate hike. Romaine Bostic and Katie Greifeld counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. Carol Massler, Tim Stenovic making an appearance. Welcome to our audiences across Bloomberg Television, radio, as well as streaming on YouTube. 8 Fed meetings, Carol Massler.
Yes.
Over the past 10.5 months, 8 rate hikes. This was the smallest, or matches the smallest we've gotten so far. The market seems to be betting that might be it.
It's like Jay Powell said, pivot. I mean, it's really pretty remarkable in terms of how investors are all in on it. They are reading this as dovish. They are reading this as that there will be an end to the rate hiking cycle, maybe even cuts later on this year. If you look at what traders are pricing in, equity rally, and you're seeing those yields, Tim, back off.
So did they just completely ignore the hawkish language? I mean, here's an example. Further rate hikes will be appropriate. It's premature to declare victory. We have a lot of work left to do.
Yes.
There was a lot of hawkish language in there.
Yes. So the answer to the question is yes, Tim.
Okay. I guess it was a rhetorical question.
As we look at
And
an
yes,
S&P
Virginia,
500,
there is a Santa
near the
Claus.
highs of the day. To answer your question, Tim.
I don't know. I see it both ways. I don't know what kind of bird this was, because at the same time, you don't have Powell necessarily leaning against the easing that we've seen in financial conditions, even as he says, you know, the job isn't over yet.
Yeah, I think the big issue was why he didn't push back a little bit harder. Was that just maybe a slip up on his part, or did he actually have a more tactical reason for doing so? But you talk about what bird, I mean, you can't really put this, at least what we heard today, into a hawkish camp or dovish camp. But as you know, Carol and Tim, over the next 2 days, we're going to start to hear from a lot of the other Fed members, and it'll be interesting to see whether they push back on what Powell had to say today. All right, we do get the closing bells here in New York. This looked like it was going to be a down day, pretty much green across the stream. The Dow Jones Industrial Average relatively unchanged on the day, though it does look like it's going to finish higher by about 9 points. The S&P up by about 43 points or 1%. The NASDAQ Composite going to finish higher by about 2%. The big outperformers, though, on the day real quickly. The Russell 2000 up 1.5%. Dow Transports up about 4% here on the day. And, of course, we have to talk a little bit later about the big moves that we saw in the yield space. Absolutely dramatic today, Carol.
Yeah, no doubt about it. That is the big story here. Also big story, semiconductors. Thank you, AMD. This stock is up about, I should say the whole sector is up more than 5% in today's session. So, Katie, definitely a standout in today's trade.
I mean, you see that if you look at the industry groups, you have semis right up at the top. Like you said, up over 5%. You also have the autos doing well for another day, transportation. It's really a lot of green here. When you get to the bottom, you do see that energy is the laggard. We did have crude prices fall today, but overall, I mean, this was risk on.
Yeah, absolutely. All right, so I mentioned semiconductors, definitely an outperformer here, and AMD included, top in the S&P 500 and NASDAQ 100. Check it out, up almost 13%. We know last night the company coming out better than feared sales forecast, as our Ian King wrote, for the first quarter. Want to mention FedEx, also rallying in today's session, up more than 4%. We've seen this movie before. You cut some workers and you get rewarded. In a memo to employees, the company's CEO saying, it is cutting global officer and director jobs by more than 10%. This CEO has been making major cost initiatives at the company. And then Peloton, check it out, everybody, up 26%. The CEO, Barry McCarthy, coming out saying no longer at the brink of extinction as losses narrow. Analysts encouraged by the company's fiscal second quarter report. That's what the CEO said.
And so you get the biggest one-day rally in the stock because they're off the brink of extinction? Are they at the brink of growth?
Well, no. There's signs of wait. There's fundamentals, including signs of moderating cash burn, solid demand, which fueled a significant revenue beat. So there are some fundamentals behind that brink of extinction no longer.
Okay, well, I was able to find some red on the screen here. I want to start with shares of Snap, finishing the day down by more than 10.3%. At 10.3%. Lower after projected its first quarterly revenue decline, casting a shadow over other advertising-dependent businesses. Think Meta Platforms, expecting those results imminently. So we'll see what happens there. WestRock, interestingly enough, down 12.7% today. The company makes cardboard boxes and other paper and packaging products. It pulled its fiscal 23 earnings guidance, citing uncertain macroeconomic conditions. Shares finishing the day down by 12.7%. And then EA finishing down by 9.3% on the day. The company cut its full-year forecast. It also announced a delay with the release of its next Star Wars game. So, Romain, you're going to have to wait a little bit longer.
As we keep an eye here for those Meta earnings across the wire, let's take a quick look at what we saw in the yield space, because it was pretty dramatic. We saw yield spike immediately after that statement came out at 2 p.m., but once Powell walked up to that podium, we started to see, of course, those yields come down, and they came down hard. 11 basis points on your 2-year yield, 10 basis points basically on your 10 and your 20-year yield as well. This is a market, guys, that has clearly spoken. Whether you're talking about the bond market, the stock market, or any of the other major asset classes, they have made it clear that they think that this hiking cycle is near its end.
All right, well, we got earnings crossing right now from Qorvo. Shares down in the after hours right now by more than 4.8%, nearly 5%. This after fourth quarter revenue forecast missed estimates. The company sees fourth quarter adjusted EPS from 10 cents to 15 cents. The estimate was for 64 cents, so missing on the bottom line there as well. look in detail in this one, Carol, because this is a company that gets more than 30% of its revenue from Apple. So we could get a preview from what we see from Apple tomorrow from Corvo.
Yeah, this is a stock, though, that has been on a bit of a tear, up about 25% so far this year. So again, we think about expectations that have been building into some of these names, Katie, and whether or not the results, when they report the quarterly and the outlook, whether or not they meet those expectations.
And you talk about expectations, a lot of expectations for those Meta earnings should be coming in just a couple of minutes. You look at what shares did today, they were up about 3%. That's after they had been down lower pretty significantly on the heels of what we learned from Snap yesterday. So obviously ad demand is front and center here.
Ad demand is front and center, and I think it's interesting too. You brought up WestRock. We actually had some interesting earnings out of Old Dominion. They're all kind of saying the same thing, but the market reaction has actually been in different directions, right? The idea that there is softness here in the economy, you saw that get hit by WestRock get hit by that, but people seem to be looking past it for some of the trucking companies. Similar story in the ad space. You have certain companies like Snap that are really struggling here. Are they going to give a company like a Meta and a Google, though, a pass on maybe if they're experiencing some of the same pressures?
I think it's a tricky earnings season. It's not just one clear message. And depending on the sector or the industry, you get some different things. Even like look at the airlines. We have some that are outperforming, some that didn't. So it's just tricky to kind of make sense of a long-term theme here.
And make no mistake, the company may be called Meta now, but it's all about those ad
Meta platforms crossing the wire right now here. We're going to start off here with the 4Q numbers here. EPS coming in at $1.76 a share. The revenue coming in at $31.25 billion. The street was looking for $30.86 billion. So that's a beat on the revenue side. It does appear that adjusted EPS is also a beat, but I do need to check those comparisons. Here's your forecast going forward. The guidance, $26 billion to $28.5 billion. That's the revenue range for the first quarter. The street was looking on average for 27.25. So the top end of that range, certainly a beat on that metric here. The company also announcing a $40 billion boost in a share buyback authorization, maybe a reason why you're seeing the shares up about 8% right now. So an interesting bag here for a company that, of course, we should point out, on the revenue side, is still posting one of its worst quarters on a revenue basis, and probably, and we'll wait to look at these numbers, probably its worst year for revenue growth since it's been a public company.
Investors don't seem to care. Stock up 10% here in the after hours.
When you buy back $40 billion a share.
It's amazing how that happens.
That's going to make shareholders happy, of course. It's going to be interesting to hear from the company, whether we get some commentary on some of the competition. You think about TikTok, it seems all that we talk about. But again, you look at shares right now, absolutely flying in after hours.
Mark Zuckerberg in the statement saying that Facebook just reached the milestone of 2 billion daily active users. I think this is a double-edged sword. 2 billion is great. That's a lot of people. But the question is, where's the growth?
Yeah,
then that's the metaverse, and that's what he says is the metaverse. He continues to say that the progress we're making in our AI discovery engine and Reels are major drivers of this.
That's the growth, metaverse.
That's why he's moving to the metaverse. That's where he sees the growth.
So there'll be more.
That's where he sees the opportunity.
So they'll get over.
They've run out of people on the blue Facebook app.
Okay, but you know, in the real world, on Earth, there are actual real people, and at least right now, that's a finite number.
You sound like somebody who wasn't convinced by this, like every investor in Meta Platforms last year.
So do they then take those fourth quarter, Facebook daily active users, 2 billion, right, which was better than what was forecast? How do they ultimately, Katie, translate that into the metaverse? Do they ultimately?
Well, you think about the total addressable market, to Romaine's point, in the real world, that makes the total addressable market the Earth's population. So if you think about long-term growth engines, there you go. But how long-term is long-term? Maybe this is premature.
Okay, so we're back to TAM, total addressable. I mean, I feel like this is, what is this? Are we like back in like 2012 here? I mean, at some point, we've seen this pivot that Mark Zuckerberg made that took them, let's just be clear, took them from a double-digit revenue growth rate, and I'm talking like 40%, 30-something%, to a negative sign. 3 straight quarters now. So what am I missing?
But don't you think that revenue growth would have happened with or without investing $10 billion in the metaverse?
I have no idea.
I think it still would have happened because that's what the ad market is right now.
This is all about a bet. If the metaverse is right, if this is something he's creating where there's going to be tremendous growth going forward, then it's right. You think about companies like, not apples to apples, but GM, Mary Barra, right? Really getting rid of a bunch of brands, really getting into the EV space. Companies sometimes have to pivot. If he is making the right bet, then ultimately, we just don't know how long it might take to pay off. It's a bet on whether you believe in this strategy.
Yeah, it's not even just about the strategy, though, right? It's also about how are you monetizing this? If this is just another ad platform in the way that Facebook was and Instagram was, why am I to believe that the end result is going to be much different than what happened?
Because ads used to be big on linear, right? Then they got into the mobile world, the online world. Like, we've all waded into that. That's where it's going, right? Yeah. Tim, does it move to another one?
And advertisers go to places where the eyeballs are. And Mark Zuckerberg is betting the eyeballs are going to be in the metaverse. Whether or not he's right, I don't know. But what he doesn't have right now is TikTok.
Well, I mean, to the point of how do you monetize this, this is why if you go to the gaming world, I mean, there's a lot of backlash from the gamers about things like the metaverse. They see it as a cash grab, what you're going to buy skins and other virtual items. Perhaps I can see people actually spending money on that, but in terms of how much money that actually makes you as a company and whether that money goes to you is an open question.
Can't you do that now? You go to Roblox, you can go to a bunch of other platforms.
You go to Neopets, perhaps you do.
Thanks, Kate.
It's a blast from the past, Katie.
I think time will tell, guys. This is a bet on future technology or future ways in terms of how we all interact. I don't know. You could, we go.
I mean, that's fine, Carol. Defend your boy. But all I'm saying is,
I'm not. I'm just saying we don't know.
We don't.
And I think,
why am I debating? Let's say you are right that the metaverse ends up being our future. Why is it Facebook that is going to be the one out front in this?
They might not, but they might just as well be, right? They're already connecting with users. If they're somehow able to switch them over, he's not my boy. I'm just playing,
the stock was down 64% last year. Right. Investors didn't buy it. Do they start to buy it now?
Well, they're buying it right now. It's up 14%.
Well, they're buying. The company's buying, shares back, so they're buying that.
Yeah, it's a buyback.
A couple of months here.
That first quarter revenue too, that was
what is the
potentially
terminal
better
rate
than
for Facebook?
forecast.
That's what I want to know.
I would love to ask Jerome.
Is Zuckerberg going to release a dot
This is what
plot on what's
happens
happening
when
in
there's
the
a
metaverse?
Fed day with you guys. All right, time will tell. All I can tell you is investors.
I got to take a nap for that.
Investors are bidding shares of Meta up about 13% in the after. So we're going to continue to monitor it, guys. Yeah, I know exactly. Fed meeting? What Fed meeting, everybody? It's all about Meta right now.
Okay.
All right, that's a wrap. Our cross-platform coverage, Beyond the Bell, radio, TV, YouTube, and on Bloomberg Quick Take, folks. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you're listening and watching Bloomberg Business Week. What are you thinking?
I'm thinking that Romaine is ready to go at it about Meta earnings.
Listen,
I like it.
Who makes fun of Meta? Right? I keep saying with climate change, we're all going to be living in the metaverse because you're not going to be able to go outside. But having said that, who knows?
I know someone who knows everything.
Does she?
Yeah. We've got Alex Brinker
No
with
pressure.
us. We're very pleased to have her with us. In fact, she was in here before these earnings even came out. She's furiously typing away, getting to the bottom of what's happening with shares of Facebook. It is formerly, of course, Facebook. Now it's Meta Platforms, just out with earnings. I want to get back to these right now. And we got Bloomberg Technology Reporter Alex Brinker here in our Bloomberg Interactive Brokers studio to do it. Okay, so Alex, I know you weren't paying attention to what Carol, Romaine, Katie, and I were all yelling about because you were actually doing important real work. But now that you've had a good 6 minutes to dig into these
Excuse me, Tim, but I was doing real work
I was too. You were. We were. What are you seeing? What sticks out here?
I'll tell you what's jumping out to me in 6 minutes that we're also sharing on the blog on the terminal. Revenue beat for the fourth quarter. They also seem to have some pretty strong revenue estimates for the first quarter. First quarter revenue estimates of $26 billion to $28.5 billion straddle what analysts were estimating. So that's exciting. I bring that.
That's ad dollars?
That is the majority of their revenue is ad dollars.
Okay.
So close to upwards of 90% of that is ad dollars. So that to me is saying that what we heard from Snap yesterday, that the malaise in the ad market is leveling off at least to the level of folks expect, that seems to kind of play out that narrative. Who knows what we'll hear on the call? We're looking for some more clues on where the ad market is going, but that top line number is really jumping out at me. Another number that's
more so than the buyback?
The buyback was my number two.
Got it.
$40 billion in share buybacks. Look, last year, 2022, was the worst year on record for Meta. They fell, 64% on the year. So we've had a little bit of a recovery in the stock. Definitely a jump in the stock this afternoon, up 15%. But clearly, the company thinks that the shares are undervalued. Now, investors sold off last year basically because they're concerned about where this company is going in terms of strategy. You have the ad business, like we said, makes up a majority of revenue, but a lot of the focus and the renaming of the company has been on this kind of far-flung virtual reality future that the company calls the metaverse. Now, when it comes to earnings, the metaverse sits in a business unit called Reality Labs. Reality Labs is a big loser. They lost $4.28 billion in the fourth quarter, more than analysts estimated. So when it comes to the hard questions, that will be on costs, and Reality Labs seem to be the big cost suck with a big question mark these days.
But Mark Zuckerberg coming out in a statement saying that 2023, the management theme is, quote, year of efficiency, focused on becoming a stronger and more nimble organization. Is it a nod to the thousands of people who were laid off just a few weeks ago?
13% of the workforce laid off in the end of last year. So yes, it needs to be. And it seems like he's projecting that it's not just a change in the cost structure, but it's a change in how the company is thinking going forward. Remember, this is a company that's only seen growth up and to the right? We've seen now sales declines for the first time a few quarters in the row ever for Meta, or when it was called Facebook. So it seems like they're trying to kind of at least project to the street a reason to give patience, which is what he was asking for last quarter, and he wasn't afforded by the market when the stock fell 25% on the last earnings day. So it seems like he is needing to change his tune a little bit more from trust us, we know what the future is going to look like, to, oh, look, we're actually going to be efficient now, and kind of drive toward running a more kind of priority-focused business.
If that first quarter revenue outlook was a miss or disappointing, would we be having a much different conversation right now?
Absolutely. That's what we saw happen with Snap yesterday. So if that first quarter was a miss, I think you can continue to have kind of questions around, look, if you want to build a decades-off virtual reality future, you got to fund it somehow. Don't forget about the bread and butter.
With the caveat that this is an impossible question to answer, I'm going to ask you anyway. Is the 16.6% rise in Facebook stock right now about the share buyback or about the revenue number?
I would guess it's a mix of both. If this comes back down to earth, I will say it's the share buyback. If it continues to stay high, I would say it's the revenue number. And not to throw it to tomorrow, but we get Alphabet earnings tomorrow as well. Alphabet and Meta are the two kind of monsters in the digital ad space. They've really traded off as there's been kind of economic uncertainty and marketers pulling back on spending. So if that stays up and Alphabet hits, then I think this is more about the first one.
Not necessarily scientific, but just doing our GIPO aftermarket, function on the terminal, it looks like as soon as the revenue number hit, the stock shot up. I'm not saying that it didn't go a teeny bit higher on the buyback news, but as soon as that revenue number, and I would agree that if they're able to fund it, right, investors are going to say, okay, go ahead, because you're still making a ton of money.
So Facebook is an advertising company now that sells ads in Instagram and in Facebook.
Hasn't it always kind of?
It has, but over the last year, Mark Zuckerberg has said, we are a metaverse company. We changed the ticker name. We're investing in Reality Labs, which, as you noted, lost billions of dollars in the fourth quarter.
Alex, what do you remain 2.0?
Well, Facebook stock up 17.7% right now, Alex. Okay, so I have so many questions for you. If we think about this from the perspective of Snap, what did they get right and Snap get wrong?
Meta got right not taking a big hit to kind of change its ad product in the first start of the year. Meta's ads on Facebook and Instagram are really focused on direct response. So that's where you are selling products immediately. That's the slice of the digital ad world where marketers are still spending because it is seeing their dollars go to work immediately. Snap had some very Snap-focused changes yesterday where they said we're actually rolling out a lot of technology updates to our ad product and we're going to take a big hit in the first quarter. That being said, Meta is the giant, right? Aside from Google. So Meta carries a lot more weight. They have a much larger chunk. They had a duopoly, them and Google, which they lost last year, but they're still kind of the strongest ones out there. So I think, again, some leveling off in terms of some of this malaise in the ad market seems to be positive news, and that's reading through in at least the revenue projections.
$2 billion. You, I think, on the blog were saying, I think that's the first time that they've hit 2 billion in daily active users. I mean, the behemoth. Cool stuff. Alex Barinka, thank you so much. She covers a lot of the technology world for us here at Bloomberg. Joining us in studio, Meta continuing to rise in the after hours. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg, an up day of Fed Wednesday. But first, we begin with a headline, developing story from the Bloomberg Professional Service. The flagship company of beleaguered Indian tycoon Gautam Adani pulled that record $2.4 billion share sale after a sell-off triggered by a short seller's report engulfed his group in turmoil. Now, some Adani bonds have fallen to distress levels as that stock sale was pulled. The Dow, the S&P, and NASDAQ all higher today. After the closing bell, we heard from Meta Platforms. Meta reported better-than-expected sales during the holiday quarter, fueled by strong demand for advertising as it attracted more users to its Facebook social network. After hours, we've got Meta up right now by about 18%. S&P today rallied 42 points, up 1%. The Dow up by 6 points, little change there. NASDAQ up 231, a gain of 2%. 10-year yield, 3.41%. Spot gold up $23, the ounce up 1.2% to $19.51. And West Texas Intermediate crude was down 2.5%, $76.88 a barrel. So an update for the Dow, the S&P, and NASDAQ again. 10-year at 3.41%, the 2-year 4.10%, and the S&P up by 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. If your business was hurt by COVID, it may qualify for a payroll tax refund. Even if you took PPP, your business may still be able to claim the Employee Retention Credit. See if your business qualifies for ERC assistance at getrefunds.com.
All right, so maybe you've heard of it, the nonprofit Core Response, started by actor Sean Penn, that's really stepped up when it comes to helping people in Haiti, that after the 2010 earthquake, for saving American lives during the pandemic, and doing so much more. So Tim, sounds like a lot of good deeds. I'm really coming in to help up clean up messy and difficult situations, right?
And yet, as a Bloomberg Business Week investigation has found out, what was going on in the inside of the nonprofit, according to employees, was another mess as well. It's an exclusive story. It's in the upcoming new issue of Bloomberg Business Week. It's out on newsstands tomorrow. It's already online at bloomberg.com/businessweek and, of course, on the Bloomberg terminal. We've got with us Bloomberg News Wealth Team reporter Sophie Alexander, along with the editor of Bloomberg Business Week, Joel Weber, both in our Bloomberg Interactive Brokers studio. Joel, I know this charity because they did so much work in Haiti and so much work during the pandemic. What happened?
Well, when CORE was getting started in places like Haiti, really was disaster relief response, right? And it was actually fairly modest. Not dozens of employees, not millions upon millions of dollars, but COVID really changed that. And what the Sean Penn nonprofit did was really double down in Los Angeles, and it became effectively like a de facto healthcare operation. But with that growth and this massive influx of money that it saw, there also created some chaos, and I think that chaos led to Sophie's reporting. So Sophie, what did you hear, and where did that lead you?
Yeah, so like you said, they grew incredibly quickly during the pandemic. They were just about a dozen employees beforehand, and then they grew to thousands over a matter of months, and less than $7 million in revenue in 2019 to $122 million in 2021. So that's enormous growth. And so I started reaching out to employees after I heard about this, and basically they were saying, yeah, it was a total mess inside. A lot of employees said there were a lot of financial issues. A lot of employees told me about sexual harassment at some of the testing sites, including the one at Dodger Stadium, which was one of the largest, if not the largest, testing site in the U.S. during the pandemic.
What I found so remarkable about this was the way headcount exploded. You point out in your piece that headcount went to 3,000 plus people. And some context there, as you write, Sophie, it's larger than the Bill and Melinda Gates Foundation at one point.
That's right. They're an operating nonprofit, so they had all these people on the ground, and they started out just by getting volunteers to respond to the pandemic, but quickly started turning them into full-time employees. And a lot of these were young people working their first jobs, but then later on they brought also very experienced nonprofit employees from other organizations who knew how this was supposed to go.
Okay, so the story starts with the fundraiser, and to just give a sense of the star power and the setting and where money gets raised for a nonprofit like Core Response. Like, take us there. Take us to Miami.
Sure. So a nonprofit like this, it's a celebrity nonprofit. They spend a good amount of time and money on fundraisers. And these fundraisers are home to Sean Penn and a lot of his rich and famous friends, like Leonardo DiCaprio. The one in the story at Art Basel in Miami in 2021 was hosted by the pop singer Anita. Delphine Arnault, the heir to the world's largest fortune, was also there. And everyone was told that this was going to raise money for Latin America COVID response. That's what was on the invitations that were shared with Business Week. That's what was on the marketing materials. And I spoke with employees who said it took a lot of nagging of the CEO to, hey, why hasn't this money reached Brazil yet? Because that was basically the only place they were doing such work at the time. And why hasn't it gone to Brazil yet? Why hasn't it gone to Brazil yet? And the CEO was essentially like, it doesn't matter if we actually spend it in Brazil. That's what these employees were telling me. And so according to an email that we saw, it ultimately took almost 6 months to make it to Brazil. And that's ultimately where all the money was allocated. But it's kind of a confusing mess in between.
Sophie, is this about like an organization? Like when you talk about the money, how it started out, and then, you're talking about raising $200 million. Is it a case of an organization, a nonprofit, that all of a sudden just ran really quickly and they didn't have the people, the infrastructure, the systems in place? Or is this about an organization that maybe internally had some really bad eggs?
Well, yeah, their response to our reporting is basically, they responded really quickly to the pandemic. It was a huge challenge and an unprecedented one, and they rose their hands and said, we're going to do this. And
they did it well, to be fair.
And they did it well. They did, respond to the pandemic well. And that's what they're saying. But, I'm talking to people who are saying we're almost 3 years on now, and it's still internally a problem, financially a problem, and they're saying that a lot of this runs up to leadership basically not wanting to do much.
And so walk us through some of the financial problems that some of the employees flagged to you in your reporting.
Sure. So it's a lot of, kind of mundane stuff that's kind of technical, but like payroll stuff, for example. I spoke with an employee who was getting paid for months after they had quit. And they had raised the issue with the nonprofit and hadn't heard anything.
Yeah, I was going to say, there's something, beats the alternative.
Okay, thank you, Joel. And Tim, now we know. No, but it sounds like oversight financially of money coming in, where it was going.
You've got millions of dollars coming in, and then somebody who's not even employed anymore is still getting paid. It's seriously kind of a problem.
And federal dollars, too, taxpayer dollars.
Yeah. Right, exactly. What about, who are you hearing from beyond the employees? Anybody from senior management?
They didn't.
Is Sean calling up?
No, they declined to make Sean available for an interview, the CEO, and the CEO available for an interview.
Well, Carol makes a good point. What is Sean Penn's involvement?
So he's the chair of the board, which basically means he's responsible for the thing. If there are problems, he's responsible for making sure that leadership is doing their job and doing it well and responsibly. But on a day-to-day, what people tell me is he's not really involved all that much, except for kind of as a figurehead.
And who is? Who's running point?
It's the CEO, Ann Lee.
And tell us more about her and Sean and how they came to basically co-lead this organization.
Sure. So they met in Haiti in the wake of the 2010 earthquake. She had been working in nonprofits in Haiti specifically for a while. She kind of bounced around until ultimately she was brought into Core in 2015, made CEO in 2016. And people say that Sean and her are close. They told us that they meet monthly. People said that it seems like a lot of what Ann does is to try to make Sean look good and to try to keep Sean happy. And a lot of people said that, it ultimately runs up to her. Everything runs up to her. She's the one who makes their decisions. And if there's an issue and it's ultimately run up to her, she's the one who's saying, it's not our problem.
Okay, so obviously Core had this response to COVID. As those test sites and vaccine sites have wound down, curious what's happened since they made that initiative.
Now they're in Ukraine. Sean Penn was with Zelensky the day Russia invaded. And so that really opened up an opportunity for CORE at a time when it was kind of hard for other international nonprofits to get involved. They're also responding to domestic hurricanes, so in Puerto Rico, in Florida, and what I've been hearing from not just employees, but also some partners who are seeing CORE's work on the ground is that, it seems like they're showing up to these disasters, they're taking a bunch of photos, they're fundraising a bunch of money, and then they're paying less attention to how that money gets spent to actually respond to the disasters.
Yeah, one of the things that sticks with me is like they're known in this world for showing up with cameras before almost anything else, right? Like, be seen, the dollars keep flowing that way, but maybe there's not that much impact after the fact.
That's what felt like one common denominator. They made sure that there was good visuals, even if they weren't necessarily very involved. 20, 25 seconds, a net takeaway of kind of where this is or where it stands?
It's complicated.
Okay. I know. It's never... Yeah.
Well, one thing that I think it boils down to is California.
Yeah.
All this rolls up to AG. So if AG is going to look into anything, we've clearly spoken enough current and former employees that there's some stuff to look into here.
Yeah, and I would say definitely do a read through because the sexual harassment concerns, which were also brought to the attention of the top, that seem to have been dismissed, at least according to the employees' accounts. Great story. Sophie Alexander, Wealth Team reporter at Bloomberg News here in our Interactive Brokers studio. This story in the upcoming new issue of Bloomberg Business Week. Our thanks to Jill Weber, the editor of Business Week. You can also find it at Bloomberg.com and always on the Bloomberg terminal.
Let's get a check on the latest world and national news. Dan Schwartzman is in the Bloomberg 1130 newsroom here in New York. Hey, Dan.
Hey, Tim, funeral for Tyree Nichols ongoing in Memphis, Tennessee, with the prominent speakers, of course, making their voices heard. Activist Al Sharpton with some strong words.
We understand that there's needs to deal with crime, but you don't fight crime by becoming criminals yourself.
Sharpton amongst a handful of speakers at the funeral. Nichols died 3 days after being beaten and tased by Memphis police, leading to 5 cops being fired and charged with second-degree murder. President Biden and House Speaker Kevin McCarthy meeting with the ongoing standoff over the national debt ceiling being the major topic of conversation. McCarthy is expected to be trying to tie budget cuts to compromising on the debt ceiling, which the president has objected to. Press Secretary Karine Jean-Pierre with what the president wants to hear.
He wants to hear from the speaker. What's his plan? What is his plan on the budget? What is his plan to really deal with what is at the top of the minds of the American people? How are we going to lower costs for them?
The Department of Justice completing a search of President Biden's vacation home in Rehoboth Beach, Delaware, for classified documents. Biden's attorney says that no other records marked classified were found. Back in November, documents were found at the Penn Biden Center in Washington, as well as at the president's residence in Wilmington, Delaware. Attorney General Merrick Garland has appointed a special counsel, Robert Hur, to investigate the potential mishandling of classified documents, with the investigation expected to begin this week. And after 23 seasons and 7 Super Bowl rings, former New England Patriots and Tampa Bay Buccaneers quarterback Tom Brady has called it a career. Arguably the greatest player at his position, Brady finishing with over 89,000 yards passing and 645 touchdowns. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Meta Platforms, after hours, up now by 16%. It reported better than expected sales during the holiday quarter, fueled by strong demand for advertising as it attracted more users to its Facebook social network. Again, after hours, we got Meta up now by about 16%. Stocks higher today as Fed Chair Jay Powell said the central bank has made progress in its battle against inflation, while warning that additional rate hikes are likely warranted. Here's Jay Powell from the news conference you heard live here on Bloomberg Radio.
We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
And reaction to Powell and the Fed decision from Sandy Villery, portfolio manager at Villery & Company, who was interviewed right here on Bloomberg Business Week.
He definitely sounded hawkish. He started saying that rate increases would be ongoing. He gave little indication there at the end of the rate hike cycle. But when I look at some of the dovish language, which he said they are acknowledging that inflation's easing, and they are making progress.
S&P today up by 42 points, up by 1%. The Dow up 6, little change there. We had NASDAQ up 231, surging by 2% on this first trading day of February, extending its year-to-date gain to 12.9%. 10-year at 3.41%, the 2-year 4.10%, spot gold up 1.2%, $19.50 the ounce. West Texas Intermediate crude down 2.7%, $76.71 a barrel. Again, the big after-hours earnings story, Meta Platforms, parent of Facebook, surging now by 16%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Yes, continuing to watch Meta up, as Charlie said, about 17.5% after that $40 billion boost in share buyback and that first quarter revenue outlook, definitely on the upside.
We'll see what they say on the call.
Yeah, exactly. We'll see whether or not that gets tempered back. Hey, listen, focused on Meta, but just a few weeks ago, we were focused on Microsoft, their interest and then subsequent further investment in OpenAI's ChatGPT, which has really kicked off, safe to say, Tim, another round of euphoria when it comes to all things artificial intelligence.
Yeah, you add .ai to the end of your name, or you say that you're, a company that's working with AI or ChatGPT like BuzzFeed, and you see what investors do. It certainly set the investment world scrambling to figure out who will benefit. Carol, our next guest has some thoughts on how ChatGPT could change voice-first products and services. Very pleased to have with us Nithya Thadani, CEO at the voice technology software company Rain, joining us via Zoom in New York City. Nithya, good to have you with us this afternoon. How are you?
I'm great. Thank you so much. It's good to be here.
It's good to have you with us. Explain how Rain works.
So Rain is a conversational AI company. We build voice products for deskless workers. So if you think about Alexa or Google Assistant, we build professional grade versions of those assistants specifically for an audience called deskless workers. So these are workers who do not work, at a desk literally every day. They're moving around in their jobs. So in industries like construction, automotive, healthcare professionals moving around in their jobs, and they don't, they need information and data at their fingertips. So we are able to give that to them through voice, critical information that they need at their fingertips.
How fast is your business growing?
We just raised a recent round of funding, so we have $15 million total in funding. And we're really excited for what the next 18 months is going to bring.
But what does that mean in terms of how much your business has grown? I don't know, give us the last 12 months or so.
Yeah, so right now our core product is called Ortho. It is a product for the automotive industry. So if you think about technicians who are working on vehicles, we essentially provide them OEM data at their fingertips. So instead of having to get out from under a vehicle, go over to a computer, search a database for specifications like fluid type and whatever else they might need in the moment, they can get that at their fingertips. So right now our product is actually, we are piloting in a number of different shops and pre-revenue at the moment.
Is the technology that you have at Rain, is it about the database? Is it about where things are being found, where the answers are being found? Or is it about the voice recognition technology, or is it both?
It's both, right? So it's essentially taking what is, a number of different databases that exist today, OEM data that then feeds into another database called Motor, for example, where these technicians typically get their information, and making that data conversational. And I know we're going to talk about ChatGPT, but there are just so many parallels between that kind of conversational nature of the interaction. So it's taking this data, making it conversational, but also making it domain specific. And what I mean by that is a lot of the AI that's out there today is generalist. So if you think of Alexa or you think of even ChatGPT, you're asking a question and you're getting they want to serve the general public. So you're getting a response back. When you go really deep into an industry like automotive or healthcare, as we are, you really need to understand the nuances of that specific industry. So I'll give you a little bit of an example here. If you were to say wheel nut, which is a very common term to a auto technician who's repairing a car, to our assistant, they'll understand it as wheel nut. If you were to say that to a general assistant like Alexa or Google Assistant, they'll hear it as will not. And that's because they're not trained to hear will not, right? So what we're doing is really training our assistants for the way that professionals speak to one another. What is the lingo that they use every day? And how do we make sure that they understand that so that they're not changing the way they speak?
So in other words, if they want information or something, they're speaking into something and then getting it on some kind of device, is that kind of the back and forth that ultimately is happening and will happen, in your view, a lot more?
Yes, so they're in this case, the modality can be a tablet, it can be a mobile phone, but you are essentially kind of asking for information, and it could also be a device that doesn't have a screen on it, but a microphone. But you're essentially asking for information in the moment, and you're getting an answer back rather than kind of getting a number of links or more databases that you have to look into. Again, a lot of similarities to ChatGPT in that. It's kind of taking away the layers of searching that you would do on your own and giving you a distilled answer.
To be fair, like I walk into the house or walk out of the house and I'm constantly like, or especially when I'm leaving, hey Google, what's the temperature? Like I'm definitely having a conversation increasingly, not just inside my head, but increasingly with the devices in my home, and they're useful, whether it's time, whether it's information. So, you take that on a professional level, and I get where you're going. You did say you were pre-revenue. Talk to us, though, a little bit about ChatGPT and all the developments that have come out about it. How is that impacting how you're thinking about your business and the growth of it?
Sure, absolutely. Yeah, I mean, listen, this chatbot is kind of truly transformational, right? You've got suddenly something that allows you to ask any question on any subject or topic in natural language, so how you and I would speak to one another, and you're going to get an answer back instantaneously in seconds. And so, you can ask for, the history of pop music, and you're going to get an answer back within moments, probably faster than you could have asked that question. And that's exciting and interesting to us for two reasons. Number one is it's not pulling that answer, it's generating it, right? It's almost as though the AI is reading a number of different information sources and coming up with its own perspective. That's why it's called generative AI. But the more interesting thing is that it's really doing that in a human and conversational way. So Carol, if someone were to ask you a question and you didn't know that person, you would not answer robotically or kind of in a singular way. You would make inferences about the person based on the context, where you are, how they're asking the question, who they are. And that's what ChatGPT is really doing. They are understanding human language, both written and spoken, and the nuances of it, and they're trying to mimic that. So as that technology kind of moves forward, it's really exciting for us, in this conversational AI industry, to see more and more people engaging in that kind of human AI way.
Totally can see it. It just makes a lot of sense. Really nice, Nithya, to check in with you. Really appreciate it. She is the CEO at the voice technology software company Rain, joining us via Zoom in New York City. Just quick back to, I guess safe to say, our top headline at this hour, certainly when it comes to earnings. Meta shares off and running, up 18% after the first quarter revenue outlook. Definitely rosy, and a huge
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 4:53 right now on Wall Street. Meta platform stock up just about 18% after ours, 17.8% right now after reporting better than expected sales during the holiday quarter, fueled by strong demand for advertising as it attracted more users to its Facebook social network. CEO Mark Zuckerberg said Meta is making progress with its investments in artificial intelligence, particularly for improving the videos it shows users on Facebook and Instagram. Again, after ours, Meta up now by 17.8%. FedEx has delivered a package of job cuts. FedEx is cutting its global management jobs by more than 10% to become, quote, a more efficient, agile organization. This according to a memo to employees from FedEx's CEO. Rivian Automotive is reducing its headcount by 6% in a cost-saving measure, but sparing assembly line workers at its sole operational plant in Normal, Illinois from the cutbacks. Today, Rivian up by 1.6%. Big move higher today for Peloton Interactive. Stock was up by roughly 26%. Peloton reported improved cash flow and a narrower net loss in the latest quarter, leading CEO Barry McCarthy to say that questions about the viability of the business have now been put to bed. Peloton today up by 26%. After earnings, Snap shares plunged today by 10.3%. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We've got Dan Schwartzman in the Bloomberg 1130 newsroom in New York. Hey, Dan.
Hey, Tim. The Department of Justice completing a search of President Biden's vacation home in Rehoboth Beach, Delaware, for classified documents. Biden's attorney says no other records marked classified were found. Now, let's go back to November. Documents were found at the Penn Biden Center in Washington, as well as at the president's residence in Wilmington, Delaware, in his garage. Attorney General Merrick Garland appointing a special counsel, Robert Hur, to investigate the potential mishandling of classified documents, and that investigation is expected to begin this week. The funeral for Tyree Nichols ongoing in Memphis, Tennessee. Nichols, of course, died 3 days after being beaten and tased by Memphis police, which led to 5 cops being fired and charged with second-degree murder. Other cops, of course, have also been charged with other crimes as of now, an investigation ongoing. Vice President Kamala Harris speaking at the funeral.
It was not in the interest of keeping the public safe, because one must ask, was not it in the interest of keeping the public safe that Tyree Nichols would be with us here today?
Harris, amongst other dignitaries, speaking at that funeral. Now, White House Press Secretary Karine Jean-Pierre says that President Biden is looking at police reform.
The president is very much looking forward to meeting with congressional, the members of the Congressional Black Caucus, and to have a conversation, a real conversation about how to move forward on police reform and other shared policies.
The Biden administration also moving to slash billions in credit card late fees and calling on Congress to open up mobile app stores to greater competition, alleging that both Apple and Alphabet act as gatekeepers in ways that harm consumers and inflate prices. President Biden's going to announce the measures at a meeting Wednesday today of his Competition Council, which has been assembled to ease the grip of corporate consolidation in some key industries. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman. This is Bloomberg. Carol and Tim.
Thank you so much for that update, Dan. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could be missing out on an opportunity to claim the employee retention credit. Innovation Refunds has helped thousands of small and medium-sized businesses claim over $3 billion in ERC refunds and may be able to help yours too. Learn more at getrefunds.com.
All right, everybody, as we get ready to wrap up here, we are certainly focusing on shares of Meta in the after hours, continuing to trade higher. In fact, holding on to, let me just pull it up again on my Bloomberg, still up about 17, almost 18% in the after hour. The key headlines, revenue topping estimates, and really that outlook for first quarter revenue, the high end potentially topping estimates, and then the buyback boosted by $40 billion. And so the stock
right out of the gate, off and running in the aftermarket.
Yeah, Facebook adding 70 million users. It's passing the $2 billion threshold. It got the high end of the revenue forecast. 2 billion users. But look, I think that's part of the story, as I mentioned on TV earlier. Where does the company go? Where does the Facebook app go? They don't have TikTok. They have Instagram, they have WhatsApp, and they have the Facebook app.
They say they go to the metaverse.
Exactly. And that's the big question if in